Hi everybody, and welcome back to Fang Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. Last week, I gave you some perspective on the Fang stocks in which I showed you the very long-term valuation trends of the Fang stocks to see if we could glean some insights from what has gone on before. I said it then, and I'll say it now. The market has a memory, and what has happened in the past is frequently a strong clue as to what will happen in the future. Anyway, this week we're going to go from the sublime to the ridiculous. I'm going to go from the telescope to the microscope and do some close-in navel gazing to see what the rally this week has done for the Fangs. And this is one great advantage of being a client of ours, by the way. You can closely monitor our SVA charts every day, so you can see when change is in the air. And it doesn't take an hour or longer either. Okay? 10 minutes a day is all that you will really need to keep tabs on every stock that you own on your portfolio. And when changes are coming fast and furious, as they are now, and as I expect will likely be the case for some time to come, joining our investment community will keep you completely up to date with all your portfolio holdings and keep you well informed. Just go to www.strategicanalysis.ca/pricing and get started today. But before we take a close look at those Fangs and what's going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Okay, well, we're going to start with about the only stock that I actually really would like to hold, and that's Netflix. And the reason, of course, is that Netflix already has reached its very, very, very long-term low. At its super growth price, that's 3.5 times book value, has had a nice run, but is holding in nicely above its LSG price, which is 4.5 times book value. This is a stock that doesn't look as if it wants to let go at all. Amazon, however, of course, is still in that downtrend. Remember that bubble price was the long-term bottom. It tried to mount a good rally and actually break out for the HB2, but that failed, broke down, pulled back, a perfect technical breakdown pullback, and is now heading slowly lower. And Meta, same story, also having broken below its super growth price and is heading lower as well. So we have two stocks in clear downtrends. Now, last week, 4 stocks did something interesting. They were kind of below trend, and then they popped back over, or they hit trend and held. The first one being Alphabet. Well, today, even with all the bad news so far, Alphabet is holding at its low super growth price. That's 4.5 times book value. I am a little bit worried, however, about that falling fair market value trend. Microsoft, I've been expecting a bounce at the HB1. You remember that? I had said that a number of times. Well, it actually got down there, broke below, and then popped right back over again in the strength of earlier in the week. Today, however, unfortunately, the stock has let go, and it's now sharply below its HB1, which is 9.5 times book. NVIDIA, same story here. Came down to its HB2, that's 12 times book, broke below, promising lower prices, but popped back up over again. Today, the stock has got hammered. Apple, again, the same story. A little bit below, back over, and today, back down again. Now, so that's 4 stocks that broke down, pulled back, and have failed to hold the breakouts. Tesla is a very interesting stock because in the face of a very strong week, look what happened to the stock. It actually broke down and had 4 days going straight down. And today is no better. That's for certain. Remember that I sort of said, I wonder if something like this could happen, because you see back here, okay, earlier in the year we had that period of about 3 months of what I call sloppy trading, sort of back and forth, back and forth, back and forth. That is often a sign of market concern and indecision. Well, initially, Tesla kind of pleased everybody and broke back over the line and had a lovely move up to its HB5, but that turned out to be it. And it was now drifting along its HB4 price, which is 16 times book value, and has now broken, and broken rather badly. So in summary, how long did it take to review in some depth all 8 FANGs today? Maybe 7-8 minutes, maybe as long as that. And that's with some additional chatter on my part, reviewing what I have said before. If you have a 20 stock portfolio, you could have run through them all in just a few minutes more, and you would have everything that you need to know about what's going on. A picture is often worth 1,000 words, and I trust that the pictures, the charts that I showed you today, will help you going forward. The FANGs are conveying a powerful message of extreme uncertainty right now, and I would urge you to keep these pictures in mind. The recent rally has produced barely a blip in the structural prices of the stock market indices. Stock market history is not in your corner if you happen to be bullish, so please keep that in mind. The major market indices have always bottomed at breakpoints, never in between, as they are now. Now, if you'd like to be bullish, Netflix is hanging in nicely above its LSG price. That's 4.5 times book. The super growth price, 3.5 times book. It's a very long-term low, and the stock looks eager to hang in. I would continue to stay with it. You know where Amazon is heading, don't you? After failing to hold at HB1, as I said would be the case, it could not hold there, and looks as if it's heading back down again to its bubble price. It's very, very long-term low, and I hope you wrote that number down. Meta is heading for its mid-growth price. That's 2.5 times book. It should get there easily. Now, 4 stocks hit and then fell mildly below breakpoints before rallying back on side, none of them having triggered a sell signal. With today's setback, Alphabet is still holding at its LSG price. That's 4.5 times book. So we're okay so far. But Nvidia, Microsoft, and Apple recovered in strength but are failing to hold in today's weakness and may therefore well be heading lower. Finally, in the face of a strong rally, last week Tesla broke down below its trading range bordered by its HB4. That's 20 times book. Last week I said that you could stay with the stock as long as the HB4 held, with heavy emphasis on as long as. If you are still holding, maybe we will get a breakdown pullback yet. But that lengthy period of uncertainty that I reminded you may now be coming back to haunt the holders of the shares. So lots to think about this week. As we've seen over the past 3.5 years with our Fang Friday telecasts, these behemoths have provided many opportunities to trade, both on the long and the short side, and nothing has changed this week. There's always more to do. For now, this has been Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right